welcome to my channel. I'm Doris. I'm here to show you what my stock account updates and today's market. Today's been any fluctuation market, and let's just talk about the U.S. economy in general. So it has been a volatile period last week as we experienced a pretty decent fluctuation in all three stock indexes. Overall, there are a few sectors still focusing on, one of which is the banking industry, and as we can tell that it has been showing a relatively positive performance, weighing by but as we can see, a relatively positive performance in the beginning of the week until we see that geopolitical concerns and other monetary expectations showing greater concern. Crude oil and gold prices led the commerce CBOE Fear Index VIX briefly broke through the 220 mark on Tuesday, close to the high in May, and it has been continuously entering some extremely threatening and dangerous zone in the past few years due to, in general, a greater concern for geopolitical concerns and economic outlooks. With less than 3 weeks before the Fed's November decision, the Israeli and Palestinian conflict has complicated people's expectation about the market, and disrupted the new economic concerns, which is a recession that's upcoming in the third quarter and the fourth quarter of this year. Last week, the CPI was expected. Last week's CPI shown to be 3.7% in September from a year earlier, slightly above the market expectations, while PPI rose 2.2% in September, which is 0.6% from August. It is worth noting that since it's a great cool down in July of 3.0% CPI in July, there hasn't been a relative trend of increasing, and this since due to rising oil prices. But also, one thing to note that is that because CPI is calculated annually, that we can tell that last year's high was at 9.1% in June, and it showed a relatively flatter growth ever since June, which means that the relatively year-on-year growth is going to be more significant for the months after June 2022, because there is less of a discrepancy between the growth rate of inflation and then in the calculation method that the government is using right now is showing that the lower inflation in the third and fourth quarter of 2022 is showing a lower scale of deflection. Therefore, the inflation rate for this year, 2023, the headline CPI will show nominally higher. The U-Michigan Consumer Confidence Survey show an inflation rising to 3.8%, which is even higher than 3.2% last month. And this is due to the recent drop in the consumer confidence that the American families' financial pressure has been greatly increasing, as we've been discussing about the stimulus bills since the pandemic has been stopping, and the government has been trying to tighten its budget to reduce some spending on the economic recovery in the American families. And let's now talk about the bond prices. Last week, the 2-year note stabilized above 5%, while the 10-year note fell to 4.62%, the biggest weekly drop in near 3 months. The latest inflation report and weak demand for the Treasury auctions triggered the market selling, but escalating safe haven buyings, people's risk averse investing behaviors still drawing investors to buy the Treasury notes. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.